This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be going over the datasets in the SPY for June 25th, 2025. And with that said, let's go ahead and jump straight into it. Alright, so today we had some interesting data, and by today I mean June 24th. We had the consumer confidence come in much cooler. I discussed in my video last night that this was a very real possibility, seeing how we had a ton of our data sets recently were suggesting that the consumer confidence is going to very likely start dropping off, and it did. It's a whole 6 points lower, which is a pretty big deal when it comes to this number. Now, Powell did testify today. I did not get to see the entire testimony in one go. I had to see bits and pieces because I had an appointment. Kind of same thing for tomorrow as well. I have an appointment right as he's testifying, so I'm only gonna hear bits and pieces. But based on what he said, the treasury market and the market itself reacted very, very, bullish, and the yields dropped, which allowed TLT and the bonds to be bullish, allowed equities to be bullish because the sorry, I'm losing my train of thought. The uh the chances of a rate hike were heavily increased. And I'd pull up that data, but the CME doesn't show very well on the computer, and I don't have another graph for that right now to show you. But just take a look at the 2-year note auction. It came in a whole 0.2% lower, which, for the 2-year yield, that's massive. That's a massive decrease in the yield. So that means that the Fed is starting to prepare to cut rates again. Now, the CME, you can type in whatever search engine you use. You can type in CME Fed Watch, and I'll link it in the description as well. But the the rate cuts went from basically the market was pricing in a single rate cut for this year, and now it's pricing in potentially up to 3 rate cuts. But how those are priced in are basically point 25% or 0.25% each rate cut. So the entire cycle is priced in for a 0.75 rate cut overall. Sorry, I'm trying to plug in my headset more. Which means that either that could be a single 0.5 rate cut plus another 0.25 rate cut, or that could be 3 meetings of 0.25, 0.25, 0.25. It generally won't be a single meeting, so it's not like they're going to just 0.75% cut and then pause for the rest of the time. So what this is saying overall is that the Fed is starting to price in rate cuts, and the market's reacting very bullish to that. I mean, obviously, the market's getting ready to push all-time highs again. We're seeing the yields pull down pretty massively. We're seeing economic data coming in pretty cool, so there's a lot of reasons for the rate cut to actually go through. Now, tomorrow, what do we have going on? Essentially, we have the massive amount of data at 10 a.m. and 10:30 a.m., but it's really just going to be overshadowed by Powell testifying at 10 a.m. This is going to be the second day of the congressional testimony, so it really does depend on how many Congress members have questions for him, but this can be the full hour and a half or however long each testimony can last for. Or it can last for, whole like 20, 30 minutes. It really just depends on how many questions he's going to get tomorrow. So, other than that, I'm again expecting the yields to come in cooler. I don't really expect Powell to change his tone overnight to being more hawkish and causing the yields to go upward. So overall, the data set should be pretty cool overall. And again, on Thursday, that's when we're going to start seeing some of the more important data sets for the week, Thursday and Friday. So just one more day of Powell testifying, and we'll go from there. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And going over the TA as always, let's go ahead and hop into the daily time frame, open up our moving averages and our Bollinger Bands. Now, I was a little surprised today because I was expecting the 5 mile to entirely cross the 10 mile. As of open today, I was expecting, from my video last night, I was really expecting the 5 mile to be around that 599 range. Well, it wasn't there. It was at the 580 or 598 20-ish range for the majority of the day. So, what does that mean for tomorrow? Tomorrow, since the market closed at 606.78 today, and the 5 mile is currently at 598.53, it's very, very likely we're going to see the 5 mile around the 601 to 602 range. That means the upper bounds of the 5 mile. And when I say upper bounds, I just want to clarify this because I've been getting questions about this pretty often. But the upper bounds means the $1 to $2 range above the actual moving average price itself. It's not something that's reflected in an indicator, it's just something I personally watch out for. The lower bounds is going to be the $1 to $2 range below the moving average. So if I'm saying the upper bounds of the 5 mile, that means $1 to $2 above the 5 mile. Lower bounds, $1 to $2 below the 5 mile. So hopefully that makes sense. Okay. So the upper bounds of the 5 mile is very, very, very likely going to be around the 603 to 604 range, which doesn't put us very far away from that at all. And that puts the lower bounds of the 5 mile around the 597 to 598 range. It could be between that range, but really just look for the 598. You'll know if we start selling off whether we're going towards the lower bounds or not. Now, we are within the pretty much the same bounds of the 10 mile right now, which is another reason why I believe that tomorrow is going to be a pretty bullish day. That would solidify the cross of the 5 mile over the 10 mile and just... Sorry, I'm losing my breath here for a moment. And just looking at this visually, you can see how the 5 mile pulled down and it's now starting to pull up and it's starting to cross over that 10 mile range, which, the 10 mile means basically the 2-week average. So that's a bullish signal. That's a very bullish signal. And just one other thing we have going on here is that if you can see right there, we have another upper Bollinger move, and I discussed this in my video, I believe last night, but I don't remember. It's been a long day. Been up for quite a while. Anyway, enough of that. But we are within the upper Bollinger. We did close above the upper Bollinger, so this does trigger my mechanic of the upper Bollinger move. Alright, and just quickly pulling this up, and I wrote this a while back, but this is kind of just the rule set that I always kind of abide by when we get to the upper Bollinger. So I always treat the upper Bollinger move or lower Bollinger move as kind of a 4-day process. The first day, I'm looking for the market to break out of or hold above the upper Bollinger price on close. So essentially, it needs to If we have the upper Bollinger say at 607, then if I'm expecting a upper Bollinger move, then I want to see 607.1 or above for the close to really solidify that. Now, day two, I'm looking for a higher high. So seeing how currently our upper Bollinger is at 606.34, that will pull up very likely to the 608 range. And seeing how the market's at 607, 85-ish, give or take, it's very, very likely we're going to hit very, very close to that 609, potentially even higher than that. It could jump all the way to 611, 612. Um, and I'll show another reason why in just a second here. But going back over the rules, excuse me, we are looking for the day two higher high. And at the top of the day, this could be in the morning, afternoon, it doesn't really matter. But what you're looking for is on the microstructure, and that's the 1 minute time frame or 5 minute time frame. You are looking for a bearish structure, so a head and shoulders, a inverse cup and handle. Excuse me, I keep losing my voice. But something to suggest that the market wants to pull downward. Now, what's going to start happening on usually the end of day two, day three, we start consolidating towards the 5 mile. The 5 mile will be pulling up to this range. We get the higher high, and then we solidify kind of a new level um, of support. Now, not going over the moving averages or anything, just going over the structure. This is a super large bullish cup, and this move really broke us above the um, major selling channel that I've shown over a few of my videos. But this 609.59 is the previous all-time high. It's very, very likely that this day two higher high is going to push that range and then start to build a bear structure. And at the top of that bear structure, start to pull down and consolidate. Um, Overall, this is a very large cup. This cup top is going to take, a week, week and a half to fully build out and start pulling down significantly. But that's what we're going to start looking for is, a potential overshoot, but it to start pulling down and forming a handle. Okay. Going over I'll pull up the 4 hour time frame. You guys can follow on the hourly. We broke this really heavy consolidation range, and I talked about this in the video last night, but this was turning into an inverse cup, and that kind of just got canceled out. We do have that wonky candle there from the pre-market. That doesn't really matter a whole lot, but it is showing that this was a major level of support. It was grabbing all the stops, all the stop losses, taking all those calls, and picking up all those calls and just running the price up. So that was a very key thing to watch for, and it was, essentially the reason why um it was allowed to push up so much today. But I am looking for the day two higher high. Again, there's not anything too crazy in here structurally. We did have a cup and handle form today. But again, I am looking for this much larger cup to fill out. So we have potentially an inverse head and shoulders forming here. I'm looking for this to fill out tomorrow, build upwards towards that 607.85 range again, and then head upward towards the all-time highs and very likely push all-time highs and break above that 609, 610 range. So that's kind of the thesis for now. If we are to start breaking down, then what range are we looking for? Again, we're looking for the 5 mile. So we will start looking for the upper bounds of the 5 mile and see how the market reacts to that price. If it rejects and starts heading back upward, that's bullish. If it pulls through that range and starts heading downward, then that's bearish. So I hope you have a great day tomorrow. Trade safe, and I will talk to you in my video tomorrow night. Have a good one.